Welcome back to the Maverick Podcast, where we break rules, crunch numbers, and separate the movers from the losers. I'm your host, and today we're diving headfirst into the crash of the Magnificent Seven. They're bruised, they're battered, and they're 15% down since January, dragging the S&P 500 down 6% in 2025. Are these former market darlings now the ultimate value plays, or is it game over? Spoiler alert, it's not all doom and gloom. Let's unpack the chaos and pinpoint the gems hidden in the rubble. First up, Amazon! Trading around $194, it's 20% off its February peak. Why buy now? Well, Amazon's valuation is at its lowest ever, just 25 times projected 2026 earnings. Analyst Mark Mahaney from Evercore ISI is bullish, eyeing a $270 price target. That's a sizzling 39% upside from today's levels. Amazon's secret weapons? An upgraded Alexa, the promising satellite internet venture Project Kuiper, and automation tech that's cutting fulfillment costs big time. Plus, AWS alone is a trillion-dollar cloud titan. Did I mention Amazon might soon dethrone Walmart as America's top retailer? But wait, there's more! Alphabet, yes, Google's parent, is surprisingly cheap. At about $163 per share, it's trading at just 18 times this year's earnings, the lowest among its peers. Investors are nervous about AI competition and hefty capital spending. $75 billion this year, anyone? But there's serious upside. Bill Ackman, legendary billionaire investor, notes Alphabet's operating margins actually improved last year. Plus, YouTube, Android, and Waymo keep Alphabet's innovation engine roaring. Even amid antitrust scrutiny, Alphabet's poised to bounce back. Now let's talk Meta Platforms, Zuckerberg's comeback kid. Trading around $600, Meta is down from its lofty $750 high, yet still up on the year. With a forward PE of 23, Meta looks pretty sweet. Zuckerberg flipped from villain to visionary, focusing on AI-driven ad targeting that keeps profits flowing. Sure, there's a $65 billion spending spree and Reality Labs bleeding cash, but with untapped gold mines like WhatsApp and Threads, Meta is positioned for explosive growth. Mahaney slaps a bold $725 target on Meta. Upside alert, 23%. And finally, Nvidia, once flying high, now down 23% at $115. Growth jitters, tariffs, and regulatory headaches spooked investors. But Nvidia's cutting-edge Blackwell AI chips are only starting their market conquest. Bernstein analyst Stacy Rasgon calls worries premature. Historically, buying Nvidia at a 25x PE has paid off big time, and Rasgon sees the stock hitting $185, a massive 60% climb from here. But beware! Apple and Microsoft fans, brace yourselves. Apple's growth looks sluggish, trading around 30 times earnings at $210 per share and struggling with innovation fatigue and weak China sales. Analysts see limited upside. Microsoft, despite solid earnings projections, feels overpriced after a disappointing Azure performance, so it might stay stuck in neutral for now. Bottom line, while the tech giants may have stumbled from magnificent to momentarily miserable, Amazon, Alphabet, Meta, and Nvidia are your top bets for a killer rebound. That's a wrap for today's high-octane dive. Remember to subscribe and tune in next time to the Maverick Podcast, because playing it safe never changed the world.